Good morning, everybody. It's Chris from Serene Education with the Four Majors Announced update for the 9th of January 2014. Four majors this morning, starting with Euro against US dollar on the daily. Let's have a look and see what's been happening. Progression recently has been stalled as we failed to break above the monthly 61.8 fib level here, which was clearly the October high, December high, and latter part of December also. We had a major move candle, a huge candle range on this particular date over here. However, by the end of play, price moving to the downside, very negative indeed at a major support and resistance level, fib level high. We saw progression 2 days later, but I think most of the people had actually left the party, and subsequently we saw this major pullback on the market on the euro against US dollar. And as it seems at the moment now, we're looking for more consolidation. The past couple of days have been very, very indecisive. You can see prices just been moving sideways. The candlesticks very much still positive. The indicator box very much positive. However, you'll notice that there's a bit of negativity propping up the daily and the 4-hour time frame. And the RMO on our shorter terms is not confining with or moving with the the institution moving average is not moving with the RMO indicator, which is not a good sign. We want these two to be working with each other, especially in strong trend analysis. So consolidation and the RMO is clearly telling us that, because they're not working together, so therefore there's got to be indecision or doubt, and subsequently we are moving within a consolidative range. So moving lower recently, very important today being a Thursday. We have the interest rates announcements for both the Eurozone. The interest rate minimum bid rate dropped from 7.5 to 0.25, sitting at 0.25. Are we going to see a further change? We had inflation reports the other day, which doesn't really do well for the Eurozone. That'll be interesting to see this morning. However, we also have German industrial production month figures, and we also have the French 10-year bond auction, very, very important. The French really in a bad situation at the moment. So clearly here on the Euro chart, you can quickly see no further highs. And if we're not seeing any further highs, then we likely see further lows and consolidation lows. So at the moment now, you can see price is being squeezed. We have non-farm payroll tomorrow as well. So ideally, end of play this week, we'd like to see some sort of answer, either a consolidation here on very weak US data for non-farm payroll, or very strong non-farm payroll data would push the euro even lower, and subsequently a break below the 50% retracement level here would see price testing the institution moving average before we see further tests of the 38.2 level low that we saw back in August of 2013. So a lot of indecision at the moment now, and primarily as we go into non-farm payroll week. So just heads up, be patient, and we could get those results sometime later this afternoon or tomorrow. Sterling here again on the daily, we had a consolidation pattern forming through December. We had some movement at the latter part of December going into the start of the new year. However, we had a bearish engulfing candle which took away all that progression, and now we're just hovering around the monthly fib level. A lot of resistance prior to the new year, and subsequently since moving into the new year we've had a break. However, it needs to maintain above this 38.2 monthly fib level now to paint a more positive stance or outlook for sterling against US dollar for the months to come. And if we can spend more time above here, you can see the indicator box really pretty much telling us we should be looking for buying opportunities. That will then mean, especially if we get great figures tomorrow that complement sterling moving high against US dollar, or weak non-farm payroll figures for the US dollar, which would then push sterling higher, then we could look towards, or to see price moving up towards a monthly fib level here at 1736 and change for the foreseeable month. We also have today, we have asset purchasing facilities. Are we going to see the Bank of England continue with their 755 billion pound purchasing facility? And we also have the official bank rate statement for the interest rates announcement for sterling. That's been unchanged for years at 0.5%. Are we going to see economy changing a stance? The overall effect is we're not going to see that. We also have the MPC rate statement that follows that news announcement. So for sterling in particular, we have trade balance figures this morning at 9:30 GMT, which is also very, very important. They're expecting a slight contraction there, which is down from negative 9.7 billion to I look roughly around about negative 0.14. So we'd like to see contraction on that particular one. We are seeing a slight expansion on that. Apologies, working way back. So if that comes out any higher, then we could see sterling moving on that news announcement primarily as a knee-jerk reaction. But then the most important one would be that the interest rates announcement later this afternoon from noon onwards. So hang in tight, wait for the news to come out and see what price action does, and then we can look to trade it going into the US session. US dollar Swiss franc daily here, clean bounce recently. US dollar finding a lot of support on the weekly fib level here at the 88.50 mark, which is the 38.2 fib weekly level. We had a lot of negativity on the longer term time frames. We have been in a very much a negative downturn for the US dollar against the Swiss franc. You can see we've been trading below the institution moving average, and we spent most of 2013 moving sideways towards the latter end. We saw a lot of sell-off through September right through to now, but we've had a nice consolidation bounce recently. We've seen a lot of strength for the US dollar against the Swiss franc, and we've seen a juicy bounce. And at the moment now, clearly it's just it's a pullback against a very strong negative trend. And we are seeing swing lows, which dictates negativity. And you can see the indicator box very much indecisive, as we've seen a lot of moving higher over the past couple of days. So hence your daily, your 4 hour would start looking positive. However, the long-term sentiment still favors negativity, and our intraday is starting to look a bit negative, and the R squared is complementing that selling. So indecision starting to creep back into the market again as price now moves towards within reach of a major support and resistance level here at 91.78 and change. It's thereabouts. You can see a lot of consolidation support at this level and consolidation resistance at this level. So in and around this area, you can see prices now trading not too far away from that. So the indecision starts to creep in again, because recently prices fell to rally higher than that, primarily because the institution moving average is still governing the resistance level on that, and you can see we're not too close. So here again, also very important, non-farm payroll is going to pay some sort of a idea on movement here. So here also be tentative, rather bide your time, be patient, and we could see either one or two things. We could either see US dollar rallying against the Swiss franc, aggressively breaking above that and start getting our blue candles, therefore looking long-term weekly fib level positive highs here at 94 130 and change would happen to be our all-time high. We swing high recently. If we get above the institution, that's going to be very, very strong for the US dollar against the Swiss franc in terms of overall sentiment, and that would then dictate that we should be looking for price then to rally up towards a monthly fib level highs, which is our May highs that we saw last year. So that would be very, very positive. The other outlook is, because we're still very much in a negative trend, is the institution moving average moving around or moving lower and then capping price action moving higher. And subsequently we have a bearish engulfing candle here over the next couple of days, especially after tomorrow. In fact, that would then dictate that we would see price making a new swing low, or currently not making any new swing highs, which would then dictate that we have a major support and resistance level here at the 91.78, therefore forcing price back towards those current support lows that we've just come from. Therefore we could actually target that level, and we're looking in excess from where we are trading right now to the prior support and resistance level lows, roughly around 240 odd pips, so more than enough in the tank in terms of profit. So here again, we have a blue arrow. However, the candlesticks are still very much negative, and I don't see them getting any positive or showing a positive outlook unless we're actually trading above the institution. So here again, rather stand aside and wait for a nice confirmed break above that to tell us that price is still then looking to trade higher. Last bit of the day, US dollar Japanese yen, a lot of movement after the break of that wedge that we saw last year. In fact, through November, December, we've had a lot of positiveness for the US dollar against a very weak yen, and you can see in the indicator box very much telling us that we have one or two areas in our shorter term time frames where the R squared is not complementing that positive buying. However, it's primarily because we are moving within a consolidated range. We've had a lot of pullback here because price has now tested the 61.8 monthly fib level, resistance level. So anybody who bought way back here in early November would have had this area here as a long-term target. Now they've got it, and you can see a lot more people taking profit. Hence the pullback's been a lot more sharper, played out a lot longer as people take more and more of their actual close more of their accounts as we head into this area. So here to see any further buying opportunities, we would need to see the 61.8 being breached, support being forged, and then we could then target back up towards the 78.6 level, which is a healthy, let's get a grasp of the healthy 800 pips and change. So more than enough in the actual target range for us to warrant taking that trade. However, we would need to see price getting above it. Quite clearly over the past week or so, we've seen price failing to actually move higher than the 61.8 or the 105.48 mark, and subsequently we've seen price consolidation. You're not going to be making any profit over here if you are holding this. Rather, just take everything off the top. If you are still in this, wait for price action to move. We have non-farm payroll tomorrow. That's going to be quite interesting. Later this afternoon, we have unemployment claims for the US market, which could also reflect quite importantly on this particular pair. However, we would need to see any further buying opportunities. We would need to see the 61.8 being breached. Failure to do so over this week, including close of play tomorrow after non-farm payroll, would then dictate we should be looking for sharper pullbacks. And if that's the case, then you can take the current low to the current high, the resistance level high, and then we could target these levels back towards 23.6, the 38 to 50, and the 61 back towards our monthly fib level, as well as our institution moving average. So there's going to be opportunities here, but you just got to play by the rules. Be patient. There's a lot of news out today as well as tomorrow. We don't want to be speculating or trading speculation. Rather let the market dictate its hand, and then we can actually trade the outcome. So patience is a virtue here. Be patient and you shall be rewarded. That's it. Short and sweet today. Please, if you are using any of the Serene Education templates, to please back it up with some very, very strong money management rules. It's a great template on its own. However, like anything, if you don't apply principles, you don't apply the right money management rules to it, it's not going to be worth anything. So please, please, please adhere to the money management rules. If you are interested in this particular template or any of the Serene Education educational courses, please look for the email that precedes this video at the end. Drop us an email and we'll get back to you and we can have a talk through it or chat you through it. Other than that, hope you have a fantastic trading day today. Keep to the rules. Don't trade for the sake of trading. Look to see what the market's actually trying to do, and once you get a clear signal from the market, then go ahead and trade. Okay, but otherwise keep it simple as I mentioned, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.